Hello, welcome to Nifty's weekly analysis. In this video, we'll try to analyze Nifty's move for next week and what are the potential targets, what are its key levels that you need to watch for. So all this we will discuss with the help of price action and indicators. Then we'll check the Elliott Wave, which is the main part of this video. And then there will be option chain analysis at the end. So before we jump to these analysis, let's check what we discussed in a previous week and whether that came true or not. So we expected Nifty to drop on the downside. So this is Billionaire channel. You must subscribe to our channel and let us know your feedback on our videos. So this was the video that we published. This is the thumbnail. This is video on 22nd of August. And here we explained how the drop is expected towards 15,000 or even more on the downside. And this was WXY waves that we are expecting as Nifty failed to break 18,115. That was the swing high of X wave. It failed to break that. It made a bearish red Marubozu candle, and that was the signal for us that drop has started. So this we discussed already. You can watch that video. A link will be added into the description. So yeah, this is how we expected. We even expected a small pullback on the next day on Monday and then a drop to continue. On Monday, it opened gap down. So that was the signal that there was a further fall, and it did retrace to 13 EMA. So as per the indicators, we also mentioned that it would first retrace to 13 EMA and then give a small pullback, and then it could head towards 48 EMA, which is this line. Okay, break below 200 EMA, which is currently at 16,700. We will again go on the downside, more deep on the downside. On the RSI, we see here it has cooled down and it has come below 70, and Aron indicator is now coming down from overbought or extreme positive zones. So currently still it's in a positive zones itself. It should come below 70 and this should go above 30. Probably it will turn parallel. That's what we can consider here. But yeah, this is how the indicators are telling us. And we have a next support at 17,170. Okay, below this, there could be more fall towards 17,800. Okay, this is the next support, right? This is the next major support on the charts. So hope you note down that levels based on indicators. So similar levels will come as per the Elliott wave or any other methods as well. So horizontal supports work very well, better than the trend line. So we'll make one more video on that in future, which trend line works better. Moving forward, let's check the Elliott wave analysis. So this is the Elliott wave analysis, which we also discussed with the help of SGX Nifty. Here we mentioned wave 1, 2 completed, and 3, 4 completed, 5 wave completed. After 5 waves of impulse are completed, as per the Elliott Wave Theory, it goes into the consolidation for a long period of time, and we are considering this as wave 1, and this could be wave 2, which either finished here or it has started the up move. So now again, if our analysis goes wrong and if it breaks 17,992, then I would consider a bullish case for this, and break of 18,604 will confirm the rally on the upside. But I feel that's not happening soon. Maybe another month or so, it will take time to come back on the upside. So what we are expecting here is, normally whenever there is an impulse pattern, it usually retraces in a wave 2 towards the 4th wave. So this is wave 1, then second wave will retrace towards the 4th wave. So this is not to scare you. This may happen or may not happen. This is a channel bound move on the downside. So it can even terminate near 15,000. So at least this much we are expecting. So the condition for that is break off the swing 17,345 that it made on last Tuesday. So once it breaks that on Monday maybe or Tuesday, we can consider the downside. If this is not broken, then this analysis is not going to be a valid analysis. This could be something else. So this is first part that I wanted to tell you. So here, as I explained, it is WXY complex correction. I have changed a little style of labeling the waves. So this gives a better picture. That's what I think, because previous analysis we're considering a Z wave completed here and we are shooting on the upside. So let's see which one comes true. But as of now, we have to remember this level and this level for considering upside and downside. Let's move forward and check the chart. So this is the chart from the lows of 15,183, where wave A, B, and C are completed. C is a very sharp wave, went above 1.61 Fibonacci, but failed to break 200% of retracement. So that is 1842. 18,042 level. We discussed this level a couple of times in a previous analysis when Nifty was below these levels. Yeah, that we discussed that it will head towards 18,000 and then could start the drop. So it made a top near that level and started the drop. So we can expect a pullback now to continue on the downside. If my wave count is wrong, again, this will be broken. 18,000 will be broken. That's all on the Elliott wave front as well. There is not much to discuss here. We can check couple of things like Fibonacci extension we can plot, and we can say whenever a level is broken beyond 1.600 Fibonacci, then we can consider this is an impulse fall. Okay, this could be impulse fall if it breaks 16,680. So this is long way to go. If it continuously goes in the gap downs, it creates gap downs, then it will reach below this. If that is reached, then we can assume the bigger fall is in progress. So this is one way to check it. Another way is it has already crossed 0.618 Fibonacci of the previous swing. So we can safely assume that the drop could be more severe on the downside. This is one case. So main confirmation is still pending. As long as it stays above 17,345, we are not sure whether it's going to go downside or not. So break of this is important. We need to watch out break of this level. Okay, now let's check what has happened here. There was a confusion earlier. It gave a pullback, it dropped a sharp. So let's check that. So this is a closer look now, and let me switch on some things which I have hidden. So in weekdays analysis, we did the analysis of these, and there we had couple of problems. On Thursday, it gave a sharp red candle. This was my signal for a drop, but then it opened gap up. So there was a doubt whether it's a fall or not. It was an ending diagonal pattern here, which was broken down easily. It didn't break 17,411. So I thought this is going to correct a more, consolidate a more, and then drop. But that didn't happen. And now, as per the global markets, this is looking more bearish. So let me remove this invalidation from here. So when we are labeling them, we can label them as wave 1, then wave 2 here, and internally smaller wave 1 and 2 can be like this. So the third wave will break this 17,345 low. So if that is broken, then we'll have a deeper correction. So in that case as well, when you plot Fibonacci extension from these points, so these 2 points when you connect, so 1.600 Fibonacci is coming exactly at 17,300. So with gap down opening, it should break this level and extend further on the downside. So when it gets extended, it can be any extension. So in full extension, it can even reach 17,000 as 2.600 Fibonacci, or can go towards 3.600 Fibonacci or even deeper. This is the last extension. Usually it doesn't go beyond this. It can stop here near 16,500. So hope you understand what was the move. This move asked me to exit from the short I created. So I exited somewhere here in a loss. But yeah, that's okay, no problem. If we are not catching a top, that's good. If we are breaking this, then we have a more confirmation for the further downside. So don't worry about missing catching top. You should not catch the top. It will be dangerous as well. So let's jump and check the option chain. On the option chain, here we see the major support is at 17,000 with 47.7 lakh put writers. So this is a put writer. So this is put OI. This is the major support. Second major is 17,500. Break of this will take it to a next support, which is 17,200, and break up again this will take it to next support. So this is how option chain can be read, and this is how it can tell you a better picture on the market levels. So here we can see that there was a good call writing happen, which suggested the bearish markets, and it faced resistance near 17,700. We also discussed on Wednesday that Nifty would stay between 17,500 and 17,700, and it did not sustain above 17,700 by good margin. Hence it fell on the downside, and the next day it gave consolidation. So 18,000 is a better range for this, but currently the range, as per the numbers at least, seems to be contracted to 17,700. to 17,000. So this is the range. So break of 17,500 will take us towards 17,200. Then there will be a 17,000 support. Here you see a bigger numbers as well. But I think these guys will cover their position on Monday. That will trigger further fall to the downside. So that's all. Let me know in the comments how was the analysis, and hope you watched completely. Any doubts you can ask in the comments, and let me know which part of last video helped you to analyze the markets. So thanks for watching. Have a good day. Bye bye.